What if I told you there's a secret language that every single business on Earth, from a kid's lemonade stand to a giant global corporation, has to speak? Well, today, we're cracking that code. We're learning the language of value.
So yeah, you've got a weekend lemonade stand and a massive multinational corporation. I mean, they seem like they're on totally different planets, right? But here's the thing. Financially, they follow the exact same unbreakable rules.
And that language is accounting. You know, it's not just about numbers. It's a system that's been designed to keep the entire financial universe of a company in perfect, logical balance, no matter how wild things get.
Okay, so at the very heart of this entire language is one single powerful rule. It's like the law of gravity for business. You just can't break it. And this is it, the accounting equation. It's actually pretty simple. It just says that everything a business has, that's its assets, has to equal all the claims against those assets. And those claims, they only come from two places: what it owes to other people, its liabilities, and what the owners themselves have a right to, their equity.
So this big equation is built from three core categories. I like to think of them as account families. So let's meet them, shall we?
First up, we have assets. The absolute easiest way to think about this is, it's all the stuff the business owns. The cash in its bank account, the building it operates out of, the computers on the desks, all of that stuff, those are assets.
Then you've got liabilities. This is pretty straightforward. It's what the business owes to everybody else. A loan from the bank, a bill from a supplier that hasn't been paid yet. These are all claims that outsiders have on the company's stuff. It's the O part of the whole equation.
And that brings us to equity. This is what's left for the owner once you pay off all the liabilities. It's the owner's piece of the pie, really. It's the net worth of the business. So how do we keep track of all this? Well, each of those families, assets, liabilities, and equity, is broken down into a bunch of individual accounts. This whole list is called the chart of accounts, and it's kind of like the cast of characters in that company's financial story. You've got specific things like cash and land, and others like accounts payable.
Okay, so if that equation is the blueprint, how do we actually use it? Let's get into the mechanics, the actual physics that keeps everything perfectly balanced. This is like learning the grammar of our new language. The whole system is called double entry accounting, and it's a really beautiful concept. It basically means that for every action, there's an equal and opposite reaction. No transaction ever touches just one account. There are always at least two involved, and that's the magic trick that keeps the equation in balance. We keep track of all these changes using a super simple tool called a T account. And here's a huge tip. Forget everything you think you know about the words debit and credit. In accounting, they do not mean good or bad. Debit simply means the left side of the T, credit simply means the right side. That's it, seriously. Now, check out how this works. For any asset account, like cash, a debit, a left side entry makes it go up. But for liabilities and equity, it's the total opposite. A credit, a right side entry, makes them go up. This fundamental push and pull is the engine that keeps that whole equation in perfect sync. And this gets even cooler when we zoom in on equity. See, it's not just one big bucket. It includes the owner's investment, sure, but it also includes the money the business earns, its revenues, which makes equity grow. And it includes the cost of doing business, its expenses, which make equity shrink. Each of these little pieces has its own debit and credit rules, all working together to keep the big equation balanced.
And really, it all comes down to this table. This is the Rosetta Stone, the universal grammar for the language of business. And you start to see a pattern, right? Assets, expenses, and withdrawals, they all increase with a debit. Liabilities, equity, and revenues, they all increase with a credit. If you can master this table, you can read the financial story of any company in the world. All right, theory's great, but let's make this stuff real. We're going to follow the very first financial steps of a brand new business called Smart Touch Learning. We'll see exactly how these rules play out in the real world. So here we go, the first event. The owner, Sheena, takes $30,000 of her own cash and puts it into the business to get it started. Now, we have to record this. First step is always to analyze. So what just happened? Well, the business's cash went up, and since cash is an asset, we know we need to debit it to make it increase. At the exact same time, the owner's claim on the business, her equity, also went up. So we record that with a credit to her capital account. Next, we journalize it. Think of this as the official first draft of the story, written down in a log called the journal. And notice the format. It's very specific: the date,
The debit account is listed first, and the credit account is listed below it and indented. And the amounts are in their own columns, a $30,000 debit and a $30,000 credit.
And the final step is to post. All this means is we take those numbers from the journal entry and we update the balances in their own individual T accounts. So the $30,000 debit goes on the left side of the cash account and the $30,000 credit goes on the right side of the owner's capital account.
And there you have it. This shows the magic of the whole system. Let's look at our equation now. Assets, which is just the cash, equals $30,000. Liabilities are zero, because we don't owe anyone anything yet, and equity is $30,000. Our main equation is in perfect balance. It works!
And from here on out, it doesn't matter what Smart Touch Learning does, whether they buy a building, pay their employees, or earn money from a client. Every single financial event will follow this exact same elegant three-step dance. Analyze, journalize, and post.
So, you see, this isn't really about math at all. This whole system, this language, it's about translating the messy, chaotic reality of running a business into a perfectly balanced, logical story. It tells the true story of what a business owns, what it owes, and what it's actually worth. So, the real question is, what story is your business telling?